Business News, where news for business people.
Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Hi, I'm Agam Vakil, and in the next 30 minutes we deep dive into specific trends in the markets to draw out key takeaways and its implications for investors. First, the headlines. Markets extend gains, benchmarks advance nearly 1% each. And the Nifty moves back about 10,200, and broader markets also very much in line. In Jet Airways snaps 3 days of gains to fall as much as 4% after its profits fell by more than 90% in the second quarter. And sales sees smart gains after finalizing a 6,000 crore joint venture with ArcelorMittal to set up an automotive plant in the country. And the Corporate Affairs Ministry has moved the bankruptcy court asking the NCLT to take over management control of Unitech, citing mismanagement and diversion of funds as per Bloomberg sources.
Okay, let's take a look as to what's happening in the markets at this hour. And clearly, the bulls have exhibited strength is what you're seeing in the last two trading sessions. And as we speak, markets are at days high. In fact, Nifty's crossed the 10,250 mark so far. And let's also do a check for the Bank Nifty, which slightly underperformed the broader markets yesterday. Bank Nifty is also seeing strong gains of almost 1% higher, 230. The range that one is expecting in the near term for Bank Nifty is between 25,000 to about 25,500 on the upside. And I remember yesterday's options data was suggesting the near-term range for Nifty was about 10,000 to 10,250. That's also being breached on this Friday. The next level that one will be watching out on the upside on Nifty will be the 10,350 mark. Let's also check what the broader markets are doing. Clearly, we've seen a good uptrend for the broader markets as well. We'll just change that plate for you. Broader markets have also been trading in the positive territory. The Nifty small cap index is up almost 1%, mid cap up 0.8%. And look at the strength. The advanced decline ratio is showing clearly in favor of the advances. Almost nearly 4:1 is the advanced decline ratio that one is getting to see on the screen today. Let's also pull up the India Volatility Index, which was a cause of concern for the traders in the last 6 to 7 trading session, but that's been cooling off since yesterday, currently about 13.7. Remember, just about if it recedes below the mark of 12.5, you could see further uptick coming in for the markets. In terms of sectoral indices, what's doing well? Nifty Metals Index has bounced back. It's up almost 2%, biggest sectoral gainer of the day. The Nifty FMCG and the auto indices are also doing well. And among the banking pack, you've got the private banking space since the morning session that's been higher. So the Nifty Private Index is up almost 1%. I just want to quickly pull up the contributors chart. HDFC Bank and HDFC, which together hold almost 15% weightage on Nifty, is contributing almost 25 points. ITC, Maruti are the other biggest contributors. What's capping the moves today on the upside are the likes of Reliance Industries, State Bank of India, Bharti Infratel, as well as NTPC. But no major losses seen, Agam, if you look at the Nifty constituents.
Absolutely, and when it comes to the broader markets too, Navneet, I'm looking at a massive move, a very large one, of 13% in future consumer. That, of course, has moved on account of news that we've had. And Bombay Dyeing has also resumed its move up as much as 10%. Unitech, of course, after the news that we had with respect to NCLT, has also moved up as much as 7.4%. We're looking at gains in the likes of Jayaprakash Associates as well as Moil. Both these counters gaining 6 to 7%. On the losing end, we do have some weakness in Jet Airways. That is on account of the weakness that we've seen in its earnings. Its profitability is declined by as much as 90% this quarter. And then networks, followed by TV today from the media space, both of these counters losing out in 2 or 2.5%. But on the whole, it clearly is when it comes to the momentum with the gainers, even in today's day of trade, Navneet.
All right, so that's positive, and that's been clearly reflected in the advanced decline ratio. On trend spotting today, we will be discussing the export trends for agri-input products and the road ahead for Sharda Cropchem as we connect with the chairman and managing director, R.P. Bubna. And what is making brokerages positive on PI Industries, and how do the trends in global markets look like for the company? We get an analyst view for you on this from Basant Patil of HDFC Securities. And finally, we discuss what is moving the markets today. Okay, on to our first trend of the day. The first half of this year has been testing times for a company like Sharda Cropchem, with raw material prices on a rising trend. Are any signs of recovery in sight in the second half? To answer this and to discuss the road ahead for the company, joining us on the show is the chairman and managing director of the company, Mr. R.B. Bubna. Good morning to you, sir, and thanks a lot for joining us today on Bloomberg Quint.
Okay, I think we're just going to wait for him. But Navneet, before we go to Mr. R.V. Bubna, I just want to bring out the Bloomberg consensus here. What I've noticed is that the stock really hasn't done very well over the last few months. This is on account of a lot of challenges that the company has faced because of raw materials. And from what I understand, about 95% of the company's raw materials come from China, and the raw materials costs have gone up. That's the reason why margins have taken a hit, and because of that, we're looking at, well, not such a great, delivery when it comes to returns there. So on a 3-month basis, we've seen the stock move up by as much as 5.6%.
Right.
And on a 6-month basis, it's declined by as much as 7%.
And I think the reason for this will be because the financials of the first half don't look that great. But look at the promoter holding, it's almost 74.7. You've got some pedigree investors. You've got DSP, BlackRock, Goldman Sachs India, HDFC Trustee Company, SBI Magnum. So there are some good institutions which have invested into this company, and you can see that list there. But let's get a better check. What's happening in the second half of this fiscal? I think we have the managing director, Mr. R.V. Bubna, with us now. Good morning, sir, and thanks a lot for joining us today on Bloomberg Quint. My first question to you is the first half. If somebody has to look at the financials, as my co-anchor Agam was mentioning, because of raw material pressures, the performance has not been that great. We've also seen the margins coming off. Not only the EBITDA margins, but even the gross margins have been impacted. Just want to do a ground check. How is the second half of the fiscal looking for the company? Will it be better than the first half?
Yes, ma'am. The second half is expected to be better than the first half.
What is it that's going to drive earnings, sir?
See, our top line should be better by about at least plus 15%. Margins will be under pressure, but we are also getting some good registrations in the second half. That should also help us to improve the margins.
Okay, sir, so can you give us an idea?
There is a pressure on the margins because the higher prices in China.
Right. So that's exactly what I wanted to talk to you about.
Yes, please.
Can you give us an idea about these margin issues when it comes to raw materials from China? What are the trends that are playing out in China? And in that case, have you thought of perhaps sourcing your raw materials from some other place?
Sir, this is not practically possible because today China has become the factory to the world. The productions in other part of the world, particularly Europe and America, is going down because of the pollution and toxicology aspects. And China is the only source. We don't have much of an alternative.
Okay, sir. So in
not only for us, but all the people in this industry.
Right, sir. So in that case, how long can we expect this pressure from when it comes to the Chinese markets and raw materials? What is going on in China right now? And how can we bring about any remedial action if possible?
So the first part of your question can be answered in this way, that the Chinese authorities have now realized that most of the world's production has shifted to China, and that is polluting their environment, groundwater and soil and other things. So they have started becoming very strict on the factories. They are closing a lot of pollution-causing factories in the industrial estates, and cutting down the production of other factories, mainly to control the pollution. I think this will continue for another 2-3 months, up to March. So this is the situation which every player in this field have to face and live with. And now there's another factor, is our business is driven by registrations, and we have got some good registrations in the second half in USA and in Europe. That should help us to lift up our margins and not be so depressed as it was in the first half.
Okay. So I'm just going to go back. You said you're confident of growing at a rate of 15% for this financial year, which essentially means that in the second half of this fiscal, you require a growth of 22%. Are you confident of the fact that you'll be able to achieve? Because as you just mentioned right now, that the pressures still persist in the international markets when it comes to cost pressures.
Madam, cost pressure is one aspect, and quantities and volumes is another aspect. We have been able to reach out to more number of customers, and we've been able to increase the top line. Margins is another aspect. We do not want to sacrifice the market share for the sake of margins, so we are going with the trends in the market and living with lesser margins compared to the previous year.
Okay, sir. So, you've spoken about your registrations and a lot about your pipeline as well. Can you tell us a little more about what we can expect over the next couple of quarters? And also, perhaps, where are the markets where you're seeing a little more in terms of demand for your molecules?
Sir, we are doing very well in the NAFTA countries, which includes USA, Canada, and Mexico. Our growth is quite encouraging in this region.
Okay,
and
sir,
this is all supported by our registrations.
Okay, great. I'm just looking at the inventory days, and I guess even post the second quarter earnings in the conference call, you had mentioned that the inventory days for the company has been going up. If I look at FY17, it was almost 58 vis-a-vis 44, which was seen in FY16. Is the company doing anything to reduce its inventory days?
No, I think we'll have to live with a higher inventory days in the second half as well.
Okay.
Because the stoppage of production in China, the lead period for us to get the goods shipped is increasing, and we have to keep ourselves prepared for a longer delivery time, and that is why we are ordering more quantities. We are not able to get the quantities as per our planning, and also the time period is longer. So we are being little more generous in creating the inventory to meet the demand of the products in the season.
Will it go higher than the current inventory days of 58 or 59 days, or it's going to remain around these levels?
It should be around the same level.
Okay.
All right, so, from what I read here is that you have a little less than 900 registrations right now, which are in the pipeline. So can you tell us a little more about what these registrations are all about, and what we can expect from this, and also what geographies are these distributed in across?
See, these registrations the pipeline of the registrations is very long, and the time period to get a registration varies from 2 years to 6-7 years. It is not a very simple straight line growth, so there's a lot of uncertainty. I feel that we will continue to have 850 to 900 registrations in the pipeline, but we are excited to receive some very rewarding registrations during this second half, which will give us better margins.
All right, so there's one more question on this account, sir. I'm assuming that your capital expenditure also depends on your registrations. Can you tell us a little more about what kind of capital expenditure you have earmarked for FY18, and how you intend to fund that?
See, the capital expenditure on the registration is also, we have to live with the uncertainty. If I get a registration in a year, we are capitalizing the amount invested in those registrations in the same year. But this year, last year we had spent about 100 to 145 crores on registrations. This year we have budgeted around 165 crores or so. It may go up further.
So lastly, before we let you go, what's the kind of capex that the company is lined up?
What kind of capex? I've stated that we are planning to spend about 160-165 crores or even higher on
to
this
raise any sort of
capital
funds?
expenditure. This is the only capex that we have.
Fair enough. But are you looking to raise anything, or you'll suffice
not
with the
right,
internal
not
accruals?
right now.
Okay, great. Thank you so much, sir, for joining us today and taking us.
We'll suffice with the internal accruals.
Sure, that's great. And thanks a lot for joining us today and taking us through what's happening with the company, at least in the second half, which did see some bit of cost pressures in the first half. And he's sounding pretty confident of achieving the 15% top line growth for FY18. But I think the road is not going to be that easy, because they have to grow at 22% now that in the second half, because the first half, remember, both on the top line and on the bottom line, there was the degrowth that one had seen for this company. But I guess the second trend is on PI Industries, Agam.
Absolutely, yes. So, PI Industries is seeing, well, an upswing. And in fact, the counter has gained as much as 15% in just like 1 month. And along with that, we've had plenty of brokerages which have initiated calls, and, we have longs on that. If we can pull up the Bloomberg consensus on PI Industries right now and see what the Bloomberg consensus has to say, about 92% of those analysts out there have a buy on, PI Industries. From what I understand, about one analyst of the 28 odd analysts has a sell, and it's the same for hold as well. So analysts are pretty bullish, but when it comes to the price target, that stands at around 900. This is again the Bloomberg consensus. So in terms of where the stock is trading at, it's trading at around 945, 946 currently. It is above the Bloomberg consensus 12-month price target. So we'll have to wait and watch as to what analysts make of that and whether or not they do want to eventually revise this price target. But in terms of returns, well, very good ones. And in fact, in the last 3 months, it's moved up as much as 30%. So let's take a check on what the company holds. We are in conversation with Basant Patil, at HDFC Securities, who tracks this company very closely. Hi, Basant, thanks for joining us. My first question will have to do with, PI Industries and its domestic market, and from what I understand, it is differentiating itself by focusing more on specialty molecules. What sort of advantage does this have when it comes to PI Industries in the domestic market, and what does it mean for its presence in the domestic market?
See, if you are looking in domestic markets, really, if you see the revenue contribution, close to 45%, 45 to 50% largely from the domestic market. So that's largely because of the specialty molecules. They have almost in specialty molecules, if we say close to 70-75% would be from the specialty. So that is why actually their strength, getting into the new specialty molecules every year, 1 or 2 products in 9/3 section. So that is actually giving them a good product advantage. So going in, launching different products every year, 2 to 3 specialty molecules in that segment. So that is one of the added advantage for the company. So that is how they are maintaining the market share in domestic market. But if you see again, the traction, what we are anticipating largely from the CSM segment, which they are which is predominantly for the export market. So that accounts, as on today's, it would be around 55% kind of the revenues. So we are anticipating the more of the traction from the CSM segment rather than the domestic specialty molecules. So where they have this strong order book of almost close to $1 billion. So where that even in first half actually that traction hasn't been happened significantly. Ramp up hasn't been happened. Specialty molecule, in that CSM segment, certain molecules haven't been commercialized till now. So once that commercialization happens, you will see the uptick in growth actually, very sharp uptick. So that is where actually we are quite bullish from that segment largely, rather than domestic specialty molecules.
Basant, what's the outlook with regard to the earnings in the second half? Because I can see the September quarter, the growth was not so much. In fact, we've seen the top line, the operating profit also declining. The profits were actually down almost 21%. The margins too declined, so that's not looking that great. What went wrong for them in second quarter? And are you looking at any sort of revival in the second half of this fiscal?
See, particularly in first half, because of the slowdown in the CSM segment, that is the reason largely for the downtrend in first half basically. And even in the first half actually, apart from CSM was the major slowdown. Apart from that, even domestic specialty molecules also hampered because of the delay in rainfall or uneven rainfall, which led to which that is one of the major reason actually. But if you are looking for the second half, really we cannot expect a very strong bounce back. That what we are anticipating. We are expecting almost around close to 12% kind of the top line growth in the second half.
Okay, Basant, so I'm assuming that because of the fact that PI Industries focuses on specialty molecules, it would have an advantage when it comes to margins as against other players who are in the domestic market. And secondly, when it comes to its CSM business, that would also provide higher margins. So if I were to look at the ratio of margins between its domestic business and CSM business, how would you split it, and where do you think, say, in the next couple of quarters, could you see better margins coming in from both these aspects?
See, largely better margins are from CSM segment only. Again, that is the higher margin contribution. So that would lead to, currently there are almost around 25% kind of the EBITDA margins from that segment. So if you see domestic agri markets, so that would be around 19%. So where we see an improvement of margins largely from the CSM segment going ahead. So that you can expect around 100 to 150 basis kind of an improvement in next 3 to 4 quarters, particularly from CSN segment.
Okay, Basant, just wanted to check what sort of rating do you guys have at HDFC Securities, and what's the target price?
We have given the target price of 830, so in the earlier recommendation.
Okay.
So which actually even the current market price is higher than that. So we need to revise the estimates.
So you would be revising it on the upside by how much? If you could just give us some sort of idea there.
Or are you waiting for something to happen before you revise your price targets?
See, at this moment, I feel this would be close to the upside is almost, we are in the upside actually.
But don't you think the upside could be limited? You can correct me if I'm wrong, because I'm not too well versed with the fundamentals of this company. I'm just looking at the valuation. The price to book is 8 times. It's trading at almost 28 times its FY17 earnings, and the estimated for FY18 is about 30 times.
Correct.
Isn't it on the higher side?
At this price, I feel it is fully priced, really.
Okay, so Basant, if I were to pitch PI Industries against some of the other listed players in this space, for example, something like a Rallis or a Bayer or a Dhanuka Agritech, among the stocks that you cover, how would you put them in, priority?
See, first PI Industries, second priority would be Rallis, and third priority would be given to Dhanuka, and then UPL.
And this is because on account of valuations only, or also their business model and how they go about
it? Purely on the business model.
Okay.
Purely on the business model.
But you would want to revisit when it comes to valuations and all these four counters?
Yes, correct.
All right.
Basant, since you spoke about UPL, just curious to know, is there any development which is taking place? Because we've seen the stock price moving higher in the last 2 to 3 sessions.
See, actually valuations-wise, bit very lucrative at that price. That is why it has bounced back from 700 lows to...
So you calling it a valuation catch-up?
Valuation catch-up, largely and valuation catch-up, true.
Okay, Basant, thanks for joining us and giving us a perspective on PI Industries as well as the rest of the industry. We'll be watching out for PI Industries, of course. In terms of again, if you could pull up its returns and the way that stock's done over the last few months for that matter. There you can see about 29% growth over the last 3 months, and well, not as much on a 1-year basis, because in 1-year basis it's only moved up by as much as 12%. So it certainly has an advantage when it comes to the last 3 months and the kind of returns that we've seen. Do remember that there are a lot of other stocks as well which have just moved as much in tandem. So I was wondering, can we go to Yash right now?
Okay, I think we have Yash. So let's go across to Yash Upadhyay, who's joining us with all the buzzing stocks of the day. Yash, over to you.
Hi Navneet. So we start off with future consumer in the broader market. It's the top gainer. Now the stock has gained close to 13% today after Morgan Stanley initiated coverage on the stock, and it was a rather bullish note. If we can just get the graphics on, so they have initiated coverage with a buy rating on the stock with a target price of 95, which translates into a 64% gain on the stock's closing price from yesterday. Also, we have just a second. Dude, I told them to wait.
Okay,
Yeah.
I think we'll connect with Yash. I think he also had Jet Airways, Future Consumer, and a couple of rice stocks, I guess, which have corrected in today's session. Remember, Agam,
Right.
there was a news yesterday that Bangladesh will be importing an additional 150,000 ton of rice from India, and back of which we did see stocks like LT Foods, Kohinoor, and Chaman Lal, which had gone up. But I think there's a bit of profit booking which has come in today's session. LT Foods is down. Kohinoor has also seen a downtick of almost 1.7%. But I want to speak about the metals counter, which have been strong. Until 2 days back, we were chatting about, prices crashing in LME, China metal prices were crashing. But look at the Nifty Metals Index. It's bounced back in how in last 2 sessions. And if you look at the constituents, Moil is the top gainer. That stock's gained almost 7.5%. Steel Authority. Now, this is a counter which has moved from levels of 50, 55, which was last seen mid of October. From thereabouts, we've seen a couple of upgrades also coming there. And SAIL today is trading with gains of 81. And your biggie, Tata Steel, has also seen gains of almost 3%.
Absolutely. Navneet, we were going across to Jet Airways and taking a look at what the stock is doing. As some of the experts on our shows have mentioned, this cut is not as deep as expected, despite the fact that we've seen a lot of weakness in its earnings. We were just talking to another analyst the other day, and he was of the opinion that it's not just going to be Interglobe Aviation, but Jet Airways and SpiceJet will also be the beneficiaries of the growth that we're seeing in the industry. And that's
But Agam,
possibly a reason.
If you ask any analyst in the pecking order, this doesn't top the list. It's always
Oh, no,
Indigo,
it's
because
yes,
reason
yes.
is it's highly leveraged company, and the kind of schedule which they have, in terms of repaying their debt is not too clear. And I guess most of the analysts may not be too comfortable with regard to the move that one is seeing on Jet Airways. Remember, obviously the earnings came out, it was not good. The bottom line was down about 90%. It also entered into the F&O ban. We've seen the stock moving in the last 2 to 3 sessions. So what you're probably seeing some sort of unwinding which is coming on the F&O side as well.
Yes, I agree. And of course, as you mentioned, that Jet is certainly down the pecking order, even in terms of market share. But I think we've run out of time on this show. So with that, it's going to be a wrap on this edition of Trendspotting. Up next is Hot Money with Darshan Mehta. Stay tuned into Bloomberg.
Are we live?